Okay, folks, we have more and more calls for an emergency rate cut by the Fed. What started as fringe now has become mainstream. We have Jeremy Siegel, the professor from Wharton, calling for a 0.75 emergency cut today. Elon Musk saying the same thing. And Claudia Sam, the originator of the Sam rule, which is now pointing to a recession, basically came out and said, look, guys, the rule isn't showing a recession today, but it's definitely a sign of concern, and a rate cut, an emergency rate cut, is required right now. So, I have a lot of smart people saying we need an emergency rate cut. We don't want to wait until the standard course of business where we drop 0.25 in September. Now, here's the thing, an emergency rate cut would mean one of two things, and it doesn't necessarily mean we're going to get a rate cut right now in August. It also can mean that we might get a September rate cut, which is going to be increased. So, whether we get a July or August, an emergency cut, that's really uncertain, and I would put it as very unlikely, although possible. What's more likely is, given the state of the jobs report, the unemployment data, and the whole macro information coming out right now, and what's happening with the markets, it's more likely that the emergency rate cut is going to come in September in the form of a zero point 0.5 decrease, which means double than the planned 0.25 we should have had if things were normal. Now, if you go to the Fed CME watch tool right now, what you're going to find is that the 0.25 cut is now priced in at 100%, and the zero point 0.5 emergency cut is now 70%, according to the Fed CME watch tool, which to date has been extremely accurate in predicting what the Fed is going to do. So right now, we're priced at about 70% chance of that emergency cut happening. So in that case, if we're 70% certain of an emergency cut, we have to talk about what happens when the Fed takes these emergency procedures, because it's not as certain as you would think. You would think that a rate cut automatically means we're going to get a massive rally and everybody's going to get a yacht and a Lamborghini. That's not really accurate. So I've looked at the data and I'm going to present it to you, and then we're going to work out a strategy. And at the end of the video, please stay to the end, because at the end of the video, I want to talk to you about what happens in August, September, October, and the rest of the year, because I have a word of caution for you. Please listen to the end of the video. It's not going to be long, I promise. I'm on vacation. I'm not going to be making a long video anyways. Look, I'm on my couch in my room. Come on. Look, number one, what happens if the Fed cuts rates in an emergency fashion? Well, the history shows that in the 8 times that the Fed did an emergency cut for the past 25 years, the day of the cut was 4 times positive and 4 times negative. So literally, we don't know what happens on the day of the cut. 4 times the market went down, 4 times the market went up. So the behavior of the stock market on the day of the cut is completely not predictable. Now, there's a Wells Fargo study that looked at what happened over the course of 250 days following the first cut since 1974. And the results are not that encouraging. Based on this study from Wells Fargo, since 1974, every time we had the first rate cut, the first 250 days in the market gave us minus 20% returns. So that wasn't good for the market. Now, what this means is that we're not going to necessarily have a bad reaction from the market. Nobody really knows, because historical outcomes like this, like I just showed you, they don't mean that we're definitely going to see this happen again. Even if it happened 9 out of 9 times or 20 out of 20 times, there's no guarantees that this is the time where things are going to be absolutely different. Nobody knows. Now, mostly you have to understand that these results are a little bit skewed, and I'll explain why. And this goes to what I've said in my previous videos multiple times. Remember how I kept pounding the table and saying it again and again and again? The result of the rate cut that's coming in September is going to be determined strictly, solely by the state of the economy. I told you this weeks ago. I told you, look, the rate cut is coming. That's not the question. The question is, how good is the economy that's going to be accepting that rate cut by the time it comes? And this is just another proof. You have to understand that because this Wells Fargo data shows you that we have a minus 20% average over the first 250 days after rate cut, that happens because mostly 90% of the time, the Fed cuts rates after the economy has already been broken. The Fed cuts rates because the economy is bad and the rate cut doesn't do enough and the economy keeps falling, the stock market follows suit. The stock market is not disconnected from the economy, no matter what your friends on Reddit told you. So there's a lot of skewed data here. Basically, what happens is that if the rate cut comes when the economy is good, the Wells Fargo study may not be as applicable. That's what I'm saying. So the big question is, how good will the economy be in September when the rate cut comes? How good will the GDP growth be? How good the unemployment numbers or bad the unemployment numbers will be? How good the CPI, the inflation will be, the consumer spending, the consumer sentiment. All of this is going to play a huge role in the impact of the rate cuts. As of now, GDP growth is almost 3%, which is great. CPI is at 3%, which is not bad. And we have unemployment at 4.3%, which is above the Fed expectations, well above the Fed expectations, but still in the normal, manageable region where we can actually live with that. So consumer spending is also up quarter over quarter significantly in Q2. So the data as it stands right now in August is good enough for the rate cut to do good for the stock market and the economy. But there's still a lot of time from today until the rate cut, and things may change. Now, the other thing I want to explain here is that long term, every rate cut did good for the economy long term, because when you increase the amount of money, you increase the amount of spending, you increase the amount of financial activity, money is cheaper, money is plentiful, the economy enjoys that, the stock market follows suit. But for this process to develop, you need at least 18 to 24 months, so a year and a half, 2 years, until you see the impact of this on the market. So whether we have a bad initial reaction or a good initial reaction, the long effects of 18 to 24 months and above are going to be positive. Rate cuts allow us to get more money for less. Money is plentiful, economy does good. It's inevitable. So you have to be patient with this. And if you're long-term investors, long term, the effects will be great for the stock market and the economy. But the initial reaction can go in either direction, and it's important to understand. Now, how you invest in this environment, that's the question that I think everybody's wondering right now. And look, I don't have a crystal ball, but let me kind of put things on the table. If we know that rate cuts are coming at 100% certainty, it's just a question of how much, 0.25 or zero point 0.5. We know that the short term effect daily, the day of the cut, is unpredictable. The first 6 months, 8 months, unpredictable. We don't know. We know that long term, lower rates are going to do great for the economy. That's what we have on the table right now. You have to understand that it is impossible for you as a normal human being without a crystal ball or a time traveling DeLorean to predict these things. So I put out a note on our Discord community, on our Patreon community, and I said basically this. I said, look, guys, August is going to be very violent, and September might also have the same reaction. It's going to be sideways month. It's going to go up, going to go down, very violent, very volatile, right? That means that if you're currently buying the dip, as long-term investors usually tend to do, if you're starting to buy the dip right now, you have to be very, very careful. I know there's a tendency for people to panic buy. Markets drop significantly, so people start buying up like crazy. And I've seen a lot of comments on my videos. Oh, I've been panic buying. No, no, no. Don't panic buy. Panic buying is the same as panic selling. It's a bad idea. You don't want to go on a wild shopping spree right now when you don't know whether this is the bottom or you still have a lot of stairs to go down. There might be more red days ahead for September, for October, for August. We don't know. So what you got to do in this market is buy the dip slowly, dollar cost averaging, by putting the same amount every single week, every single month, and don't stray away from this. You have to do slow, especially in August, especially in this August and this environment. We don't even know if the Bank of Japan carry trade has unwound or not. There's a lot of uncertainty, and the markets can definitely go red for a long, long time. What you got to do in this environment is slow down, DCA selectively, only in your best stocks, and make sure you do your analysis, your due diligence very, very careful multiple times. You have to have discipline. You have to have a system. You have to have a process. Now, generally speaking, and I've said it before, I'm going to say it again, August and probably September are going to be sideways months. You're not going to be seeing a lot of market rallies in the summer and in September. where you're probably going to be seeing this, and Tom Lee agrees with me on this, or rather, I agree with Tom Lee on this. I defer to him. We're probably seeing the market rally in 10, 11, 12. So October, November, December is where you should expect the rally, not now. Right now isn't the time to go crazy and load up, because this may not be the end of the rate wave we've seen for the past few days. Now, it's really important to develop a system, and it's really important to have people around you that help you to maintain discipline. It's the same way if you're trying to lose weight. If you're trying to lose weight and you surround yourself with people who drink alcohol and go to bed very late and eat junk food at 4 a.m., you're not going to be losing weight. You need to surround yourself with people who are in the same mindset as you, the health mentality, right? The same thing in the stock market. You have to surround yourself with people who won't push you to do stupid things and emotional decisions. So what I suggest you do is, number one, join our 15,000, almost 16,000. We've gained 1,000 members. Join our 16,000 Discord. It is free to join. The Discord community is amazing at doing exactly what I just told right now. Accountability partners, people who will not give you bad advice, people who will rally around you to save you from stupid decisions, like selling Palantir on Monday before the earnings on fear. A lot of people did that. Our community, nobody sold. So think of it like a support group or like-minded people who are in the same boat and in the same mindset. So join the Discord, discord.gg/Tom Nash. It is free to join, be a part of our community. And if you want to take the next step, you're welcome to join our Patreon as a member. We do have an academy, but the academy is currently full. Academy is full. We don't have any spots left, and the spots are not going to be open until September 1st because I'm on vacation. I'm not able to do academy lessons right now. So the academy is currently full. There's no way to join the academy, but you can join the regular memberships and become a member and get access to our weekly Zoom calls. We will have one this week, despite me being on vacation, probably today. So if you join today, you're going to be on time for today's Zoom meeting, probably at 4 p.m. Eastern time. We'll see, maybe 3 p.m. I have to take account the local time zone here, which means it may be even earlier than that. But I'll post it on our Discord, our Patreon, and all these places. So I do welcome you to join just the Discord if you want a free access, Patreon if you want a little bit extra, and hopefully I'll see you in the Zoom meeting. Peace.